I am here with Kristi, and she is going to be the expert today on health insurance because as entrepreneurs, once you leave your full-time job, all of these expenses are your responsibility and you don't have an employer paying for your own health insurance or contributing to your health insurance or 401ks and things like that. And we love equipping you guys with ways to invest in your 401k or set up a SEP and things like that. And health insurance is one of those things that we would just want really good information on. So Kristi is going to take it from here. And obviously, she is a female entrepreneur herself. And so if you have questions about just, you name it, health insurance, being out on your own, all of those things, today is a good day for it. Kristi, do you want to tell us a little bit about yourself, how long you've been doing this?
Sure. First, thank you so much for having me. I really appreciate it. My name is Kristi Duplichet. I am from North Baton Rouge, but I do live out here in Livingston Parish now. I graduated from Walker and then I graduated from Southeastern. I have a little girl. She is 6. I call her Ducky. She's just a little dinosaur off of what's that movie? You know what I'm talking about? The Ducky, the Land Before
And
Time.
before time, yeah.
And that is like literally her personality. She's great. She's amazing. So I have been a single mom for the last 5 years, and I actually started in health insurance, researching it 5 years ago. I worked at Verizon. I was the business account manager there. And when you work for Verizon and in sales, you know that you'll get poached from one Verizon to another Verizon. They'll offer you better benefits, things along those lines. So that's what happened. I ended up getting ripped from one Verizon to another one and signed up for all of my benefits, things like that. Go to file taxes. I owe 10 grand back to the IRS. And I'm like, what? Because I don't care. I don't care if I make $400,000 a year. I don't care if I'm a millionaire. I'm not paying Uncle Sam $10,000 for nothing. So started digging into it, went to see a CPA, and they were like, oh, you don't have group insurance. You have marketplace. I'm like, what? So they did not vet the person who was doing our group insurance that year. The agent put us all on individual marketplace plans. I was not the only person that owed over 10K to the IRS. And thankfully, Verizon, they paid it. Thankfully, they paid it. And it was an indirect Verizon, so it's not Verizon directly. But thankfully, they paid it. They took care of it. But I don't like things that I can't understand. And so I started digging into health insurance. This is a crap show. So I studied it for about a year, went and took all of my exams, and have been actually an advisor for 4 years in health and life insurance. So
Amazing. That's really cool. And it does feel really confusing. So can you speak to a little bit of that specifically? What
yeah,
is the difference
so
between marketplace and
yeah, let's do that. Let's talk about, and I'm going to keep it minimum. There's other plans and stuff like that are out there, but we're going to keep it to the 3 that we know that we confuse all of the time. So there are 3 types of insurance in the US that we're common with. So that's group insurance is number 1. That's going to be who you work for is typically going to have employer insurance. You can join on there and they typically pay 50% of it. It is a requirement that they do. But so that is group insurance. It's with your employer. That is not private. That is not public. That is group insurance. 2 is going to be public insurance. So that's going to be whatever you like to call it, but it is healthcare.gov. So it's also commonly referred to as Marketplace or Obamacare or the ACA plan. That is the second one. And then 3 is private insurance. So private insurance has been around, that is tailored to the individual, and it has been around since before Marketplace was introduced in 2010 by the federal government. So those are the 3 types of plans. A lot of people think that Marketplace is private insurance just because sometimes you might get lucky and you might see a PPO plan on there if you're doing it by yourself. Marketplace plans are not private insurance. Those premiums that they have that are on there are so high that you feel like you're getting a really great discount because it goes based off of your income and your household size. But those plans are outrageously expensive to begin with. It tailors to the individual on what they need. So if I have a client that calls in and is, hey, I am self-employed. I work for myself. I'm sole proprietorship. I don't work for anyone else. I don't have anybody that works for me. I get their information. I want to know your age, the state you live in, and your health. I want to know your health information because going based off of the health information, I'm going to know if a private plan is better for you or if a marketplace plan is better for you. Typically, the only people that I would put on a marketplace plan are going to be type 1 diabetics, or if I have a single mom that has 2, 3, 4 children and she's just starting her business, I would probably put her on a marketplace plan. Is private insurance offered in all states? Are you licensed for all states? I am licensed in 44 states across the country, and private insurance, it depends on the state. Some states require that the advisor who is selling the insurance live inside of that state. So Washington State would be a good example of that, or Pennsylvania. Pennsylvania would be another one for that. So marketplace, if you're selling marketplace plans or you're putting someone on it, you have to live in that state. So that's a really good question. Most states don't. As I'm in 44, the remaining states, they do not. I can definitely get a list and send that over to you, though. That's a good question.
Yeah, really good question. Thank you, Michelle. How scary is it to be paying for your own insurance? Like, coming from 9 to 5, being self-employed, that's the number one hang up that we see entrepreneurs have is, I don't want to give up my insurance.
Yeah, no, a lot of people are scared about, they don't know what to do. And a lot of times they just go straight to marketplace because that's all we know. When marketplace came out, private insurance was no longer promoted. You have employees that went from W-2 employees to 1099 employees, and we have to be completely self-sufficient now, which I'm not a 1099 employee. I am a broker. I've had a lot of business owners that have put themselves on marketplace plans because they think that's all that is out there. And they keep getting hit on taxes the following tax year because their income fluctuates so much. And if you don't report it constantly that your income is fluctuating, you're going to owe back part of those subsidies discount that marketplace has been giving you. And so that's really stressful for small business owners, single parents, anything along those lines, especially if you have children with special needs too. That's extremely frustrating to navigate. Yes, the government does make it seem like marketplace is the only affordable option. Something that people don't talk about a lot with marketplace plans is the cost sharing aspect of it, because a lot of people truly think that marketplace is the only option because that's what we see. But the cost sharing is the more you make, the more you pay. And you're offsetting. If you have a single person a single mom, or not a single mom, let's just say a single individual. So we have one single person who owns a business that has insurance through the marketplace, and their income is $100K a year. And then you have a mom who has 4 children. Her income is, let's say, 35 a year. You're cost sharing. So they're going to make the single person who makes more money with no kids and they're going to make their monthly payment more than they are this family, so that this person offsets the cost and the revenue that they would be receiving. Let's see. We have another one. My husband had a business and we reached out to a broker for private insurance and we were told there isn't private insurance anymore. It's group or marketplace. We're in Nevada though. So that broker is a liar. A lot of brokers are going to do things like that because the sell is what matters, right? Everybody's got to eat. Everybody's got to feed somebody. It takes a lot to find someone who truly cares about what they do. Let's talk about that. Let's talk about brokers and agents and what you should look for in an agent. I think that would probably be important too. So anytime you speak to anyone for health insurance or life insurance or finances, real estate, people who work on property, anything that has to do with value of your life or investments of an estate, they have to have a license for. So you can request that they send their state license to you. That is a great way to avoid scammers, number one. Number two, if they're only sending you one option, that's a problem. So that would be a red flag to try to avoid. There are things that are called, there are individuals and groups that are called captive agents. A captive agent sells for a company that they only sell one, two, three maybe three types of plans, but it's only from one insurance entity itself. So you want somebody that can give you multiple options. You want someone, like when I get on the phone with someone, I definitely always get their income after I get all of their health. I want to know what kind of range that you'd like to stay in, and I want to know all of your doctors because I want to see who's going to be in network with who. I want to know if you're married to your doctors, or I want to know if you're not married to your doctor. I want to know if you don't like your doctor, because if you don't like your doctor, I don't want you to be forced to stay with that doctor too. So I get all of that information, and typically clients are healthy enough to get private insurance. It's very hard not to. You would be looking at someone who's on 6 or 7 different medications like painkillers or nerve medicine, or a lot of bipolar medication that needs checkups with their psychiatrist or psychologist every 3 months. The ADHD medicine does not, or ADD medicine does not pertain to that. By the way, ADD and ADHD is very common, so that is not something that would apply to the psychiatrist or psychologist along those lines. But if you're on 2 or 3 different anxiety medicine, typically type 1, type 2 diabetics and severe painkillers or things along those lines, I would start looking at a marketplace plan for somebody. But I do have other options. They're just a little bit more expensive on the private side that I would offer as well if their income could afford it. 1 second. I just knew I was going to choke. I just knew it was going to happen. I knew it. And I've been drinking so much water to prepare for this. And I was like, it's going to happen. So a lot of this is, I'm just brain dumping on y'all, and y'all are probably super confused. But here's the easiest way to go about it. Private insurance goes based off of your age, your state, and your overall health. Marketplace is going to go based off of your income. Marketplace has to accept everyone. They do not have to pay out for everyone. That's just the way that it is. An issue that we have as brokers that have multiple, I'm contracted with 112 insurance entities for life and for health. And so a lot of time, brokers who do what I do, our main issue is trying to resolve fourth party entities. So what'll happen is a company will take a plan from another insurance company, rearrange it, put a patent on it, and get in network with selling. Now, if we listen to, that's definitely a monopoly, 1, and 2, that is a pyramid scheme. So those plans, they can sound like they're really great plans. They can sound absolutely amazing. The price is good and they're guaranteed renewable until the age of 65. That sounds great. The problem you run into is it is left to the discretion of that insurance company on whether they're going to pay out for a surgery or not. I started with a completely different company until I broke off on my own. And when I started putting those pieces together, I was like, oh, okay, I got to go. This is not okay. I can't do this to my clients. I need to fix all of this. And so that's what I did. That's why I became just me by myself and got all these contracts. When the marketplace was new, I looked into it and everything was $600 to $900 per month. Yeah, when it first came out, it had a lot of great benefits, especially for like type 1 diabetics. That is expensive. They can't help the fact that they were born with diabetes. Some of those plans are really great for all of the machine and hardware that they need. And insulin makes me want to cry. I have cried over the fact some of my clients have not only had issues with getting their insulin until I finally got contracted with a great plan, but insulin is so outrageously expensive that if you don't make a decent living to afford a plan that's going to guarantee to pay out towards your insulin, it's an issue. It's also an issue on marketplace with insulin that 1 year they will pay for that brand that you're on. And then the next year they're going to say, oh, we're not going to accept that brand anymore. So now your body has to adjust to a new type of insulin. Now, that's a big problem that I have with marketplace. You have to accept everybody, but you don't have to pay out for everything. You're going to accept these medications one year, but not the next year. I try to keep my clients away from Marketplace as much as I can. And I think a difficulty that I run into is with tax write-offs with small business owners. So private insurance is 100% tax write-off. Your monthly premiums, anything that you come out of pocket, keep your receipts. You can write that off on your taxes. It can drop you an income bracket. I have a roofing company and he's like, oh yeah, I want this. I want the best plan that's absolutely out there on the market. I was like, if you can qualify for it, I can put you on it. But he wanted that tax write-off. A problem I see with small business owners who are on Marketplace plan, if they're using TurboTax and they are not like, no hate to TurboTax because I've used TurboTax before, but if they're using TurboTax and they're trying to write off their Marketplace plan, that following year, it's going to produce a problem because now you're going to owe back even more if your income differentiates. So I don't ever recommend to somebody to write off a Marketplace plan unless they have a really good CPA or they truly do know what they're doing. And it's okay. We don't always all know what we're doing. We're not always going to have the answer for everything. It's okay to say, I don't know. It's okay to reach out to somebody for help. I do have small business owners at the end, like in January or February when things start to slow down, that'll reach out to me and say, hey, I've been on this Marketplace plan. My income stayed the same. What do you think that I should do? My answer is always going to be, you need to go see a CPA and you need to make sure that it's a credible CPA because not everyone who is in every single business is good at what they do. Okay. So that's definitely something to be cautious of. And it's also confusing, but the basics of it is private insurance is going to go based off of age, state, and overall health. And Marketplace is going to go based off of your income and your household size. Now, one nice benefit about private insurance is that you do get a locked-in rate. Typically, you have a 24-month locked-in rate, and then the percent on your increase is normally 0.5 to 1% after those 24 months. I print out my taxes, and if I can't figure it out, then I just bring that in my shoebox of receipts because that's my bookkeeping. I know, don't get on to me, y'all. Don't get on to me. But I just bring that
It's a group of bookkeepers.
I know. I'm going to get in trouble. My organization system is ADHD style. I think that it was important to go ahead and mention life insurance too. Wait a second, Becca. What do you suggest for someone who is healthy and doesn't particularly value Western medicine for more than emergency services? Are there economical options for someone like me who hasn't utilized insurance for years but would want something in case of a car accident or another type of situation? Becca, you are freaking amazing. I'm so happy you said that. That is not something I wrote on my notepad. Car accident. If you get into a car accident, you need to make sure that you have accident injury on your car insurance. Car insurance is what pays out for your injury, not your health insurance plan. Medicaid would be something, and Medicare would be something that would do that. If you got into a car wreck, that would be Medicaid and Medicare. If you do get into a car wreck, your health insurance is not supposed to pay for that. Your car insurance is supposed to pay for that. That's a different type of accident. But I like your question about Western medicine because I do a lot of Western medicine myself, healing myself, especially when I found out I am a woman, I am allergic to birth control. So I am allergic to additional hormones, and that's when I started looking into Western medicine. So for someone like you, I would recommend a benefit option. A benefits plan is it's still going to be a private plan. It's not outrageously expensive. A lot of people use them as supplements if they travel in excessive amounts. So like my travel nurses, they typically really like those benefit plans. They're always going to be a PPO. They travel a lot, but sometimes they want it in addition to a contract that they might have. Maybe it's really great insurance and they just haven't been to the doctor for a while and they need a lot of tests done. But there are still other types of injuries that require emergency care. I also use things like chiropractic and neuropaths when they're often not covered by my insurance. That's awesome. I love getting sat, crackled, and popped. So seeing a chiropractor is like probably one of my favorite things to do. A benefits plan is going to you have a set amount of benefits per year that are going to pay out for things. So for example, like a wellness checkup, You can go get a wellness checkup with your OBGYN or something along those lines, whoever you like to use. You can go get that wellness checkup and you're going to have benefits that pay out towards that. If you go to the hospital, you'll have benefits pay out towards that. Chiropractic, physical, and occupational speech therapy is also a benefit that is available inside of the benefit plan. I'm on a benefit plan because I'm right there with you. And I do have some people like nurse practitioners that like the benefit plan. I have a couple of doctors that really like it because they take care of themselves. They just want those things for emergency or those extras that they like. I spend money out of pocket to see practitioners outside of the Western medical system for my care. I haven't seen a primary care physician in years. So you'll be able to see primary, you'll be able to see specialists, you'll be able to see surgeons. Those are things that are inside of a benefit plan, and they give you like a set amount. So let's say you get 6 doctor's visits per policy year. That means that you will have 6 visits to see primary and specialist and surgeon all within that realm that'll pay out towards that. That way you're not coming out of pocket all of that money, but we never know what's going to happen, which is the purpose of health insurance and life insurance. We don't know what tomorrow holds. Coming out of pocket, I could see coming out of pocket $200 to go to the doctor every now and then when you have to go, or you're that sick to go, but coming out of pocket $10,000 and a couple grand outside of that for every time you have to do a checkup because you rolled your ankle, or I slammed my thumb in the car. Actually, my daughter did, but she can't pay for it, so it fell on me. But definitely having a plan, even a benefits plan for that backup will help situations like this. A benefits plan, Becca, again, is probably what I would recommend to you. Since you like Western medical, there are some Western medicines too that you can actually supplement. You can pay for it, and then you can go to your portal and upload it, and you'll get a check back in the mail for your portion of your benefit too. If you do like an itemized statement. So a lot of doctors that are not in the insurance world, that don't accept insurance anymore. So Excolo Medicine, that's great. That's a concierge service. I love Excolo Medicine. Dr. Willie Talbert is absolutely amazing, and his wife, Kay. They're fantastic people. They don't take insurance. They do like a subscription. So that would be an example of he gives like an itemized statement, and you can send it to your insurance, and it can either go towards the deductible, or if you have a benefits plan, it'll send you a check in the mail for your benefit of seeing a doctor, like going to a doctor's visit or blood work.
So for someone hearing this, because I'm on Marketplace or whatnot, and they're like, I would like to switch. Is there any good time to switch? Is it just open enrollment in like November or?
Oh, that's a good question. That's a good one because group insurance has been making me mad with that one. So by law, you do not have to be locked into any of those plans, your group insurance, your marketplace plan, or your private plan. Now, if you get something like a 12-month plan, that's a little bit different. Like if you get a 12-month short-term plan, sometimes I have a lot of families actually that really like it. A short-term plan, you can normally choose 1 month, 2 month, 5 month, 10 month. That really became popular when Marketplace first came out because we were forced to have insurance, or you would get penalized on your taxes for not having insurance. But you can't get penalized for it anymore, which is nice. But someone who is wanting to switch, the private insurance sector is open all year round. It is open 100% of the time. Normally, every 3 months, we either get a decrease in some plans or we get an increase in other plans. Sometimes plans come out and they're completely revised. And so I'm always running those numbers for my clients. Group insurance, though, which is normally through your employer, it is very difficult to get out of group insurance. Typically, you have to have a life-changing event occur. So that would be the same thing for marketplace plans. So life-changing event outside of open enrollment for your company that you're with, or outside of marketplace during the open enrollment period, which is November 1st through January 15th, normally for marketplace, Obama, ACA, whatever you want to call it. Outside of those periods, you have to have something called that is a life-changing qualifying event. So those are going to be like moving state, not moving cities. Those are, you physically have to move a state, a decrease in household size due to either divorce, marriage, decrease or increase in household size for marriage, divorce, or someone passes away in your immediate family. It can't be like just a grandma that lives with you that passes away. They're not going to take that. It has to be a mom, a dad. It has to be parents or a child within that household, something along those lines. And getting pregnant does not qualify you for open enrollment. So say that you're like, I don't want to get marketplace insurance this year. I'm super healthy. I'm just gonna like wing it. And then all of a sudden in April, you get pregnant. That is not a qualifying event for you to get a marketplace plan, and it is not a qualifying event for you to get on your group insurance plan. That's a really good question. So group insurance typically it depends on who you work for when their enrollment period is. Most of what I see is going to be January, August, September, October, November, and December for group insurance. In order to get out of a group insurance plan, though, you have to have a qualifying life event as well. So, how do health sharing plans work? That's a good question. I don't like health sharing plans. How they would work is you have to 100%. So, there's a company. Okay, let's do that because I'm a visual learner. So, there's a company and they have really great insurance. And they will allow you to join their insurance, but you have to abide by all of their rules, all of their guidelines. You have to see their kind of doctors and stay in their network, things along those lines. And health sharing plans can be really great if you can find the right company to be with. Health sharing plans can also be a pain in the neck if something happens to you, because most of those are going to be HMO plans. And we'll talk about HMO, PPO, EPO. We'll talk about those in a second. But health sharing plan is you joining another corporation health insurance. And so you have to abide by all of their rules, all of their guidelines. You see their doctors, you do what they tell you to do. If you go outside of that, they don't pay for it. So let's say that you're in Florida and at Disney World and your husband is trying to go fishing and he gets a fishing hook stuck in him and now great, he needs stitches, right? So you want to take him over to the local emergency room and get him stitches. You get home, they didn't accept your insurance. So now you're getting billed in the mail constantly. That's the problem I have with health sharing plans because you're outside of state and it's not a life-threatening emergency, just needing stitches. A life-threatening emergency would be heart attack, stroke, cancer. A surgery needs to be done right then and there to save somebody's life, arm, limb, a piece of their body. So I am not the biggest fan of health sharing plans, and I don't think that they're the most cost effective in the longevity. So if they tell you it's $100 a month and you have all of this insurance and that's super great for health sharing, and then something happens to you and they're like, oh, we're not going to cover that. You didn't go see one of our doctors, so we're just not going to cover that. It's the same thing with Marketplace. They have to accept you, but they don't have to pay out.
Another quick question. So actually, I'm just going to use an example. Let's say, so my daughter just broke her arm. Now she's having surgeries and things like that on her arm. What would be like the time period that you would want to stay on the insurance? So we're in July. Open enrollment's in November. That would be hands-on example. If you wanted to switch your plan, how long should you stay on the insurance to make sure everything comes through and gets paid out?
That's a good question. So how do you know when it's done? I'm a fan. So typically, I'm going to be a fan of being on there 30 to 60 days after the surgery. But that's not always going to be the case. That's a lot of times the case with the group insurance plan, because group insurance, they're going to try to lock you in. Even though they legally can't lock you in, like you're legally allowed to leave that group insurance plan when you open your mouth and say, hey, I don't want to be forced to be on this. But sometimes the company's rules and regulations are a little bit different and you have to abide by their rules and regulations because you work there. If you're on a marketplace plan and you have to have a surgery, 7 to 10 days, I would stay on it after. After the physical therapy is done, after the follow-up is done, after all of that is done. And that would be for a client that if the client was mine. Because if they keep getting bills in the mail and they're saying, oh, we're not going to pay this, we're not going to pay this. Yeah, you are. So I literally have a letterhead that's typed up and I just put the dates up to the dates of and I send back their bill. And I'm like, would you like to mess around? Because I am fine now. Here you go. Here's all the answers, blah, blah, blah. Typically, I don't run into that kind of problem with marketplace or with group insurance. I run into that problem with fourth-party private plans. Normally, that's going to be something if you get it from a captive agent. I want y'all to remember that word, captive. Also want you to remember that word for life insurance. It's the same thing. If they're captive, if it works for you, great, but I would definitely look at what else is on the market. So if you're in a group or a marketplace plan, I would say 7 to 10 business days if you're wanting to move to private. If there's a lot of physical therapy that's required and stuff like that, I would definitely give it 30 to 60 days to make sure all of that is complete. Everything has tried to be billed. You paid all of your co-pays, and I always keep your receipts for everything. Marketplace, Medicaid, Medicare, because Medicaid doesn't pay for everything. Medicare doesn't pay for everything. Lord have mercy. Medicare doesn't pay for everything, but I would say 7 to 10 days if you're wanting to move to private, or 30 to 60 if there's like several checkups and follow-ups.
Sure. I'm trying to think of a question.
Oh, I do want to touch on life insurance because life insurance is inside of group insurance. Normally, your employer will offer life insurance, or on the private sector, it's also built into health insurance. So life insurance is something that life insurance sounds so country. Life insurance is something that I've been fixing a lot of lately. And so let's talk about that. If you work for someone and you have life insurance through them, they own your policy. What does that mean? If you are terminated, if you were laid off, if the company is bought out, it's gone. It's not yours. You don't get to take it somewhere with you. There's only one company I know of in the US that allows you to take it with you when you leave, pending that you weren't terminated or laid off and that you put in a 2-week notice and you put your time in with that company and left. They're very particular about it, but that company does allow you to take it with you and into retirement if you retire from it. But that is not the case for any other company I've ever run across. So let's talk about that. Let's say you're 21, you get life insurance through your employer that you're with, and you think that everything's great. Fast forward, you're now 30 and you don't work there anymore, but you got diagnosed with cervical cancer, which is rising very high in our females. So you get diagnosed with that. You are now no longer going to be able to qualify for a true life insurance plan privately for you to own. So I always recommend, even with babies, because if a baby's born and they're type 1 diabetic, Gerber, I know, allows type 1 as long as it's within the first 6 months for them to have an IUL or a small children's whole life policy that's guaranteed renewable throughout life. There are certain things that you will not get approved for certain medications. So let's talk about the weight loss injections that have been going on lately. If a doctor prescribes you one of those common drugs that we know, semaglutide or Mounjaro or Trujero, if they prescribe that to you and you want to use it for weight loss and you're not a type 2 diabetic, you pick it up from the pharmacy, you're giving it to yourself, you are now not going to qualify for life insurance. Most of them are going to deny you. So let's talk about the parts of life insurance that involve health insurance. I personally do not write anybody without having a critical, terminal, or chronic illness. If they do not have that built into a health insurance policy, which I really don't like putting them inside of health insurance policies, that means that the health insurance company owns it. I like to put them separately. Critical, terminal, and chronic illness is inside of life insurance. You want a living benefit, you want a death benefit. I love IULs because every 12 months that you make your payment on an IUL, which is an index universal life, you're going to get free money. They're going to give you compounding interest. So like the one that I have for me, every 12 months that I make my payment, I'm gaining 7%. But I have a living benefit, I have an accidental death benefit, I have a death benefit, and I have critical, terminal, and chronic illness inside of it. So the critical, terminal, and chronic, the goal of that, and the reason I won't let anyone on my books without having that, is I need to be able to help you afford to save your life. So you get diagnosed with stage 2 breast cancer, you get diagnosed with colon cancer, prostate cancer, stomach, lung cancer. Most of us are not going to be able to afford chemo and radiation out of pocket and multiple surgeries, things along those lines that it costs. If you get into a wreck and then you call around and start asking for car insurance, well, car insurance isn't going to cover that wreck now because you didn't have it then. So I need you to have critical, terminal, and chronic illness. And I like to put it in a life form because it's cheaper, a lot cheaper, and it's something that you can build again and have as a tax write-off. Your monthly premium is a tax write-off. If you want to put more money into it, let's say that you want to use it as a savings account, you can do that as well for the IUL. So I like to put it there because it's a lot cheaper, one, and two, I can switch your health insurance plans as much as you want me to, but I never have to worry about getting you reapproved for critical, terminal, or chronic illness. Also, let's see, what if you have a previous diagnosis of critical illness? So that's a good question to have. It depends on which critical illness that it was. So that's something that we can talk about. So a lot of companies can be forgiving for certain critical illnesses. If you had a heart attack and you're looking for a heart attack life insurance, like to be able to have that again, that's not something that I would be within my realm to find because I don't believe that any of the companies would accept that. I do know that they will still always give what type of cancer, if you're comfortable with saying, Miss Cynthia. If not, you totally don't have to. That's okay. If you want to message me, you can privately if you would like to do that. Colon. With stage 1, I could get you approved. I could get you approved with a living benefit and critical, terminal, and chronic illness. Yeah. And you need to be careful too of life agents. I am a life agent, so I know the sneaky stuff that people do. Be careful with life agents, okay? You want to make sure, again, that they're not a captive agent. You want to make sure that you get their state license. You want to make sure that they give you different options. I will go ahead and name some of my favorite life companies. And I think a lot of brokers who do life insurance would probably agree with me. Kansas is going to be a good one. Foresters, Mutual of Omaha. I love Gerber. I'm always going to love Gerber. Those are my top. And Aetna. Aetna is really nice for heart attack, stroke, and cancer. So those are going to be some really good ones. Do you have any other questions for me? I hope I didn't sound too confusing. It's a very confusing market. I hope I explained it well.
No, it really is. I have gone through my life insurance license and things, and it's just such a confusing situation. One thing I would add, just if you guys are talking to her, if you currently have term insurance, there are brokers that you can just convert that over an IUL. So if you want to, you don't have to reapply. So
yes, if it's in the contract, I do that as well. If it's in your contract that it's allowed to be flipped over and I can flip it over into an IUL, then we could totally do that. Some life insurance companies do put a no on it, that they don't allow that, and they put that in there. Life agents also don't teach you about riders. And so riders are important to know. There's one that I really like. It's called a return of premium rider. So if you do get term insurance, is typically going to be the only people who should be on term insurance are those that, what is your contact info to reach out? So I'll put that in the box. Typically, people go on term insurance because they're not healthy enough to qualify for an IUL or a whole life policy. So having term insurance would still be something that is good. That way, if a death did happen to you or an accidental death did happen to you, that at least you could still your family could make all the arrangements and not just be freaking out about how they're going to afford a funeral or all of those costs that come with it, the mortgage, all of the things. So if term is the only thing that you can get, then by all means, definitely get it. But you want the rider that says that a rider placed in there that it's renewable, that you can renew this plan after its end date, which typically they're 10, 20, and 30 years. I just put my name. Okay.
And then you said you were going to explain the difference between HMO.
Oh, yeah. Thank you for reminding me. So an HMO, think of it like HMO, you can stay within the relative area that you live in. I know I'm in Louisiana, so we call them parishes. Everybody else are in counties. So y'all give my little hick self a little break, okay? So in parishes, it would reside to either the parish that you reside in or typically the closest one to you. Some HMOs can allow you to go to the whole state. Some HMOs. A PPO allows you to go in network, out of network, so you can see a doctor that you want to see. Even if the insurance doesn't accept them, you can keep that bill and send it into them. PPO will go with you out of state, which is why my travel nurses, my truck drivers, they absolutely love it. I have a couple of small business owners that travel a lot back and forth, and PPO is just going to be really good for those entrepreneurs that travel like that. So PPO. Now, an HMO is common. You're going to find that in Marketplace and you're going to find that on group insurance. You're not going to find an HMO with private insurance. That's not going to happen. So an HMO will protect you if, let's say, I actually had a client like this. Him and his family went to Colorado and they went skiing, and one of his sons got severely injured. Like, he needed a medical airlift. He needed to be sent to another state. He needed several emergency surgeries, several days in the hospital. It's going to be a fight, but that HMO still has to cover medically necessary emergency services. It does have to cover it, even if it's outside of state, but it has to be severely life-threatening. Your life has to be in danger. You have to be in the hospital. You have to be having surgeries. That's where that's the only thing an HMO will do. If something is severely life-threatening, they will pick it up if it's out of state. I think it's important to also note that most HMOs are more expensive than PPOs, and most marketplace plans are more expensive than private insurance as well.
And then we'll email out Kristi's contact information, as well as if you could send us your list of like where you can and cannot serve.
Yeah, I could do that.
For them.
I could do that.
All over the nation. I'm in New Mexico. People everywhere.
Yeah. I will send those out. I don't think that there's a lot of product in New Mexico to begin with. Now, I won't touch California. Unless you're a travel nurse and you're traveling to California. That's one thing, but my errors and omissions is not about to play in California. That's a whole nother country with a whole nother law set, and
a lot of insurance companies have moved out of California.
Yeah, Marketplace is pretty much the only insurance that's available there, and most group insurance are a reflection of Marketplace. Like I feel I don't have evidence. I don't have evidence, and I went down a rabbit hole one day. I spiraled on it because I'm a nerd. Like, in order to love what you do and to be in health insurance and to care about people, you a nerd. Because I promise you, I'm not just reading all of this law every single Friday for 3 hours, updating myself on everything just because I like to. I'm definitely a nerd, but I don't have evidence of it, but I am more than sure that there are now group plans that are run by Marketplace. I don't have evidence on that. I don't know if that's 100% true, but that's another reason I cannot touch California. I don't particularly like to touch Oregon, and I don't particularly like to touch Washington. And it's not that those aren't beautiful states. It's just that the legal jargon is just a little too much.
That's
too
great.
much.
Well, thank you so much for your time today, Kristi.
Yeah, if anybody has any questions, y'all feel free to reach out to me. I'll throw my email in there too.
Just that way it doesn't get lost.
Yeah. So if you guys have questions or you have friends that have questions, y'all are more than welcome to just brain dump in them. I live in Oregon, so I guess I just wasted my time. Technically, no. If you live inside of the state of Oregon, I actually have a friend that is a health advisor that does private insurance in the state of Oregon. So if that is something that you are looking for, Oregon is one of those states that you have to live inside of it in order to sell it. You didn't waste your time, everything, the rules still apply the same. It's just I wouldn't be able to be the person to sell it to you. Now, I would be able to be the person to go over it with you. And I'd be happy to help you find those private plans that are in network just because I don't like that. I don't like the fact that I can't be licensed in one state to specifically help an individual, but I want to make sure that they don't get screwed over. So you're more than welcome to reach out to me. We can narrow down which plans are available in Oregon and which ones would be best for you. And then I can find you an advisor there. I don't mind doing that for you.
It's so much good information was covered. So thank you so much
Yeah.
for that. Lots of
And I'm free to talk to. So let me know your questions. Okay.
Absolutely. I will go ahead and wrap this up. But if you guys do have questions, feel free to reach out to her. We'll make sure you guys get her email and contact information so that you can get in touch with her, schedule a meeting, and all of those things. It's really good to have those conversations before you need to start collecting that information and knowing what it would look like for you to leave your full-time job or to switch from a spouse's insurance over.
Oh, yeah. That's a
idea.
Yeah. Typically, I do really like to keep the employee with their employer's plan because they are required to pay at least 50% of it. And so, like, I have men that work in the plants all the time, and it's really great when they don't have to pay out for their insurance, but when they add a wife and their children onto it, it just skyrockets. So I like to take the wife and children and just put them on a private plan that works for their lifestyle because we're all about saving money over here. Look, milk's like $6. I get it. It's expensive. You ain't got to tell me twice. So I'm all about the saving the money.
Absolutely.
Thank you so much.